What the first thing I like to do with this strategy is zoom over to my 15-minute chart. Here we can see a strong uptrend on this 15-minute chart. The price move up, and there goes an area where the price is starting to consolidate. So we zoom out on the chart. So that's the second step, and then we go over to the 5-minute chart and get a view for the overall market. Of course, you can zoom back, you can zoom a little bit forward, just try to see what's taking place. You can see a downtrend. Okay, so this is what we would maybe see on the 5-minute chart. Now we're going to go over to the 1-minute chart. I'm just trying to get a feel on the large part of the chart. I'm sorry, the higher time frames, and remember each candlestick counts as 1 minute on this chart whenever you select any of these at the top here. Okay, so here we see, I'm just going to scroll along. Okay, so this would be a good example of support and resistance trading. Now I spotted an area where there's strong support by at least 2 touches in that area. And that area was right here. Now here we go. So now that I spotted this area, I selected this horizontal line. I draw a color for this line, so this is going to be aqua. This is where the price was supported. Now, where do I see resistance where the price fell to go higher? I see this is a potential area for resistance right there. So here we have a touch. Here we have a price gets neared and fails. Here price got neared and failed again. And what you're looking for is basically 2 areas, at least 2 areas. We see 1, 2, where price has failed to go higher. And once you see it touches twice or gets near this area twice without going past it, that's a confirmed area of support or resistance. So to simplify it again, this strategy once again, here is the, so far we've zoomed out. We've zoomed all the way into and selected the 1-minute chart, and we found 2 areas of support and resistance, just to keep it simple. So in this example, this is where we can see here price failed to go higher and came back down here. So this is where we would look to take a put option or a lower trade with this with a 5 to 10 minute expiry time if you're trading short-term binary options. Okay, so that would be where our entry is. So 1, 2, 3, 4, 5, and that would have been a winning trade. So we have these 2 areas working for us. Now, after let's say you found that trade and you won it, now the price breaks out of that area. So now this area becomes a lower probability trade, lower resistance area, right? It's not as strong. So now we maybe turn this color to black, and this is still a high probability setup right here at the bottom. So now the price moves along, and you're waiting. You just won that trade. You don't keep trading at this point because you've already won a trade. Why would it's smarter to not. Of course, you could have taken the chance and you kept trading, but there's a good chance that once again, if you had kept trading and trading, you would have lost right here. So why not just take your win and walk away? That's just my perspective. Of course, you can be a risky trader and keep trading this, but just take note that for me, my personal rule of thumb is to just walk away and let a new range form and be safe and sorry, just to limit my losses. That's for me personally. You can chess with your own and perform your own strategies, but this is from my taste. So we're going to move along, scroll along here, and we can see a new range start to form. Here's an area of support, but not, the price really didn't bounce off of it several times. Price extended past here. It was really like a spike. Here we have a strong area of support. This is a confirmed area of support because we have a touch here and here. And the price went up twice as it came near this area again. So this is where we would be looking for a call. Just to simplify things again, looking for calls at the bottom, right here at the bottom, and then puts at the top where we see a resistance area. You can see this entire area is acting like resistance. So we're looking for confirmed areas of resistance, of course, so you can always pull out your hash mark and see if you see something. So this is a confirmed area of resistance here. We have two touches, so I'll put a bar right here, horizontal bar, and that'll be something where I look for a put option if price touches there. Now price comes back down, we're scrolling along, we're waiting for that high probability setup, and boom, price touches right there. So here we would get in with a put option trade. And the reason why being is we see these wicks as well, indicating that the price, that's a strong area, maybe a potential area of resistance, strong area of resistance. So took a put there, see what we win. 1, 2, 3, 4, 5. We won this trade. Close, kind of a close trade, but notice how it dropped off right there. If you're trading over at Markets World, the broker that I recommend, you would have won a nice trade to the bottom. And why did we take this trade? Once again, we have at least two areas of resistance working for us. 1, 2. Actually 1, 2, this green candlestick right here. So you can find those two areas of resistance or support, make your trade, take your win, walk away at that point. That's what I recommend. And then moving along, you can see price just broke that resistance area and went up here. And we'd be waiting for the same thing. We were waiting for these two areas of resistance. Now we see, look at this here. Like we may have another area of resistance. So you see how we do it. That's how that support resistance strategy works. I'm going to come back for the next video, which is going to be my next strategy video. If you have any questions or comments on this strategy, just leave them below. I like to be detailed. Once again, just because price gets near a previous area of resistance, you still want to be careful and look for a little bit of a wick. When I say a wick, it's this thin line right above these candlesticks. These represent candlesticks. Each one of these ticks on this chart represent a 1 minute candlestick. And when you see these lines, these wicks, where the price is pushed down on these wicks, and it gets near that resistance area, that's a very good sign. Very, very good sign. That means that this area is being protected by the sellers in the market. They're protecting different areas. So this is one of my strongest strategies, and just trading this on a historical chart, we can see already it's working. So once again, in order to get a very high percentage of trades to go into your favor, you have to not get greedy, and you have to be careful with your entry points, and make sure you get good entry points. That's another key thing with this trading strategy, is you want to find those excellent entry points. Like here you can see this green candlestick and then a strong push down. I would have gotten in here as soon as possible on this red candlestick because I already have a push down here. So I'll zoom in so you can see that. Okay, let's go to the next video, which is going to be my second strategy, which is pattern.